This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
Welcome back to TradeFlow TV. You know the drill. Markets move fast, and if you're not ahead, you're under. It is Friday, June 19th, 2026, and we are closing out one of the most physically constrained trading weeks of the year. If you are holding paper shorts into this weekend, you are playing a very dangerous game of chicken with global supply chains. The divergence between political headlines and physical reality has reached a breaking point. Let's get you caught up for the global open. First up, the 60-second commodities flash. Brent breaks $86.50. The Friday freight premium is actively pricing in. Brent Crude is grinding higher with WTI pushing past $83. The realization has fully set in. Diplomatic treaties do not instantly untangle maritime traffic jams. Traders are refusing to hold short energy positions over an unpredictable weekend. Next, silver's violent decoupling. Silver is officially stealing the show from copper. The gray metal has executed a massive breakout, surging past $68 per ounce. The gold-silver ratio is collapsing as silver entirely sheds its monetary hedge identity and trades as a hyper-scarce tech and solar industrial input. Copper tests $14,000 resistance. The red metal is creeping toward historic psychological resistance, trading aggressively near $13,950 per ton. Global smelter treatment charges remain deeply negative, confirming that the mining sector simply cannot pull enough raw concentrate out of the ground to feed the AI infrastructure boom. Finally, agflation spreads to corn. The agricultural shockwaves from the recent WASDE wheat deficit are spilling over. Corn futures are catching a massive bid this morning. The market realizes that structurally elevated crude oil translates directly into exorbitant fertilizer and diesel costs for the upcoming planting seasons. Let us take a deep dive into why institutional capital is refusing to short physical deficits heading into the weekend, and how silver has fundamentally decoupled from gold. The data hitting global terminals this Friday morning is a masterclass in physical market mechanics. You cannot print your way out of a logistical backlog. Look at the Friday freight trap. Fridays in a highly constrained logistical environment are notoriously bullish for physical commodities. No one wants to be caught short. Millions of barrels remain idling in tankers waiting for insurance clearances in the Middle East. The EIA's warning of a restart lag is playing out in real time. Shutting down complex energy choke points takes hours. Restarting them safely takes weeks, sometimes months. $86 Brent is no longer a spike. It is the structural floor. This brings us to the silver tech superego. If you are still trading silver as poor man's gold, you are mispricing the asset by a mile. We are witnessing a historic decoupling. Gold is struggling against a hawkish Fed. Silver, however, is being violently consumed by the industrial sector. It is the most conductive metal on Earth. The build-out of AI data centers requires advanced thermal management, while grid-scale solar relies heavily on silver paste. Physical vaults are being drained by tech manufacturers. At the same time, prepare for the secondary agflation wave. The soft commodities market is cementing a terrifying feedback loop following the USDA slashing wheat yields. Now we are seeing the secondary wave, input cost inflation. With crude pinned above 86, the cost of marine freight, agricultural diesel, and fertilizers has skyrocketed. Farmers are passing these costs directly to food processors. This guarantees a localized food inflation spike by Q3, paralyzing the Federal Reserve from executing rate cuts. Here is the TradeFlow take. Do not step in front of the physical freight train today. The paper markets drastically underestimated the time required to heal broken supply chains. Maintain maximum defense heading into the weekend. Keep your energy hedges locked, ride the structural breakout in silver and copper, and brace your portfolios. Stay liquid, stay sharp, have a great weekend, and we will see you on Monday.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.